What is happening, my gurus? It's a bit of a bloody ready Monday and a red start to the week, but let's just hop into the chart, see what we're looking at, and see maybe where to from here. What are we looking at for the next couple of months? How's it all looking for the rest of Q1? Obviously, I think that there was a general bias around the market that unfortunately never took hold. Everything from Plan B's 98K prediction by the end of November 2021 to most analysts thinking that we'd see 100K by the end of the year, and then everybody shifting their bias to say that Q1 would be, sort of parabolic time where we'd be heading all the way up after institutional investment, which does tend to happen. Obviously, this year seems to be a new start in terms of a new cycle for Bitcoin. And I think that in general, it's just going to be a totally new market cycle structure for Bitcoin overall. So what I want to do is I want to hop into the charts. I want to start looking at the macro overlook. Of course, as I'm making this video for you guys, Bitcoin is tumbling further down. It's actually just broken through another key support, which supports my sort of bias that we are maybe going to see 28K. Obviously, this is not ideal. It's not what anybody plans for, especially when, there's sort of a nice bull rally in place with all the fundamentals all lining up for a proper rally towards 70, 80, 90K, 100K. But unfortunately, this is where we're at. Just to sort of reiterate what sort of got us onto this path, what set off this snowball effect, what was the catalyst for these massive dumps in the market. First, obviously, what came out of the States, there have been a number of Fed meetings over the last couple of months, all of which have been talking about the Fed tapering interest rates and obviously hiking the interest rates, tapering inflation, hiking the interest rates around 1 to 3 times this year. Obviously, that's not good for investors. It means that investments are going to be tightening up across the board, across the financial market, across the financial industry, where people start tightening belts in anticipation for a hike rate on the interest rates in America. Now, obviously, this is just an American thing. It just has to do with the American financial system. But of course, as we know, the American financial system greatly impacts the rest of the world and how we all do business, mostly because the global economy, for what it's worth, is underpinned by the US dollar. From all the commodities such as gold, oil, etc., they're all priced in dollars. When you listen to the radio and you hear the price of Brent crude oil or whatever the case is, it's always in dollars, which means that the dollar is the underpinning of the greater financial ecosystem. And I think that a lot of these moves that we're seeing are moves from other powers in the world, such as China, such as Russia, to try and sway the balance a little bit and try and bring some of that power outside of America and into their hands. Obviously, the communist powers such as China and obviously the old Russia, which I do believe still, sort of permeates into their new democracy. They want the power. They want to make sure that they can retain as much financial and economic power as they possibly can, simply because if the world were to get to a point where we are looking at currency devaluation and the debasing of the dollar, we will see some really volatile times. And I think that that's what it's really all about. So another move that's also happening here is a coordinated move by the governments to start creating uncertainty around cryptocurrency, mainly because this is going to be the year, in my humble opinion, that we see the introduction of central bank digital coins, CBDCs, which are going to be a governmental attempt at centralizing a decentralized network, i.e., guys, yes, you can buy crypto, but make sure to buy the digital yuan. Make sure to buy the digital rand. Make sure to buy US dollar, true US dollar, or whatever the case is, because the more you're buying of their country's stablecoin, that CBDC, the more into that ecosystem you are. Ultimately, it will help with mainstream adoption. If I want to buy something online, a retailer is not going to accept my Bitcoin. They may or may not. But somebody that's new to the game would rather and far sooner trust a stable coin than a coin that fluctuates in value. So those are all interesting things to look at. I do think that those are responsible for some of the macro trends. And obviously, like we saw on Thursday, I think it was either a Wednesday night or Thursday, where we saw the Russia news come out on a ban on cryptocurrency and obviously all decentralized finance products. At least that's what they're going for. Again, this is a completely coordinated move to either destructure Bitcoin so that investment institutions can get in, or just simply start creating uncertainty around Bitcoin so that they can move towards regulation and start bringing in the central bank digital coin. Cool. So that's enough on the macro fundamentals. Let's take a look at the charts now. And what we're looking at here is we're looking at the Bitcoin daily chart. Now, guys, obviously, I'm calling a spade here. the head and shoulder that we're seeing here was already forming around here. So, once I sort of started seeing this action happening here, it became clear to me that we were going to go down and we were going to go lower. There was no chance of sort of a continuation pattern up there, unfortunately, and it sort of looks like it wants to just complete the range, which makes perfect sense to me. I'm perfectly fine with it. We have already completed the bottom of the right shoulder, which is great because it means that now it's completed its bias, it's completed its pattern, and now it's a simple case of finding support and then obviously starting to look for the reversal. Now, in terms of finding a support, in terms of the reversal, in terms of time frame, when can we start looking to see these things? Obviously, now that Bitcoin is breaking through the key support of this blue trend line, we are probably going to see it come towards the 28K line to test that. Unfortunately, any lower than the 28K means that we've got to go to the previous summer high or the previous all-time high, which is around the 20K mark. Unfortunate, not nice to say, not nice to talk about, but it is what it is. And I think that's one of the important lessons here for us to just take note of is the fact that we need to remove our emotions. I obviously would love this to be a bullish video. I'd love this to be a video about how we're pushing all-time highs, how we're headed to the moon. But at the end of the day, this is just what it means to be in sort of the financial market. The stock market goes through this all the time. Fundamental traders go through this all the time. And, at the end of the day, it's just sort of where the stock market's going. A little bit less volatility, potentially diminishing returns over time. But we just have to look at it without emotions and just see the woods from the trees. So like I was saying, we're probably going to see, if it breaks through here, we're going to see it come towards the 28K line. Whether the 28K line holds over here or whether it lets us break through to 20, time will tell. How long it's going to take to break down, time will tell again. But we are seeming to get these like really quick and volatile, massive strikes downward, which for me, the only time that we see such coordinated moves in such quick succession have been in moves like this one over here to May, and then obviously the reversal was all in quick succession, and now we're seeing that again. There's a very, very quick move to the bottom here, which for me shows unnatural price action. Like, that is just not natural price action. Of course, we've got the panic sellers who are letting go every time we lose key support. That's obviously exacerbating the bearish moves going downwards, but this does look like a very coordinated effort to get it to wherever it needs to go in order to reverse and start changing the market structure again. So time will tell. Let's see how we hold this blue trend line over here. Unfortunately, at the moment, it's not looking so good, but we could maybe see the first signs of potential reversal before coming through. I personally, at this stage, would like to just see it collapse, see it go to 28K, confirm the support, get that third test. Here was one test over here. Here was another test over here. We can now get that third test. Again, it can hang at these levels for quite some time. We may see 2 or 3 months of that before, moving on to break through and make an all-time high again. And if we zoom out, we can obviously just see the ascending channel that Bitcoin is in. Unfortunately, the thing about ascending channels is that they do tend to break downwards. This would, for me personally, support my sort of outlook and my bias around regulation and around a potential sort of bear market coming through. I don't think it's going to be a very long bear market, this 2, 3, 4 year bear market ideal, but we could see a bear market for an extended period of time, let's say 8 to 10 months, maybe longer, once regulation kicks in. And of course, if regulation kicks in from over here, then we will most likely see absolute capitulation in Bitcoin. However, it could very well be that, we come down here, we complete the range, we move up here, make the all-time high, and then from here is where we see regulation come through, and that obviously sends it to capitulation time. Now, this rising wedge makes sense in terms of, rising wedges always break down. So if that is happening in conjunction with regulation, then it makes perfect sense. And at the end of the day, for what it's worth, that is where we're headed to. Regulation is inevitable, and it is going to happen. The question is, how do we deal with it, and where do we look to make our exit? Now, obviously, I'm all in. I don't have, I'm not looking to sell here. I wouldn't be looking to sell even if it was to collapse to 20K. I will definitely be buying here. I will definitely be buying here as well, and using that sort of to DCA my position and bring it in. I will not wait for some sort of bounce off of 50K or something like that to sell and get out at that point, because I think if we are going to make it to 50K, there might be a new range that it starts forming. However, the way I'm seeing it is potential collapse to 28K and start moving up towards the top again. When we do get to the top, when we do start getting to these regions again, we will start seeing the market get overheated, and at that point, I will be looking to move most of my assets into stablecoin reserves. There's a very cool indicator that I'll open up in the next video that sort of just shows where the market's heating out, and it's very clear to see when you look back and you correlate. It's quite clear to see exactly how the market overheating and sort of this risk of a bubble type thing. It then explodes, opens up, opens down, breaks down, hits support, and continues upwards. So let's see what happens. I'm hoping that this sort of line over here holds as support and gives us the ability to sort of start moving up again in a reversal. However, it is looking more likely that it's coming down to complete the range before moving on and upwards. I don't know how long that's going to take. We do have what you're seeing here with this A, B, and C is very simply what's known as the Elliott wave theory. And basically what it is the theory that says that the market moves in waves, especially at times of high volatility and especially when the market structure is changing, i.e. when moving from a bullish market into a bearish market into a bullish market, you will see that typically catalyzed by Elliott waves and the impulse wave theory. So all it does is it talks about the price moving in these waves sort of thing, where you've got, comes down to a low, goes and makes a pseudo high, then comes down obviously to make a lower low before continuing in whatever other pattern it was working on. So basically that's sort of where we're at. We are seeing at the bottom of the impulse wave. So I do believe that we should start seeing some sort of end to this bearish move. Obviously we're in a downtrend. We have to call it what it is. We have to say things as they are. There's no point in me having some sort of hopium based bullish outlook here when the chart is in fact showing bearishness, and obviously we're in a downward trend. The best play to do now is to sit tight and wait. If you have capital, get that capital ready. If you don't have capital, just sit it out. Turn off the charts, enjoy your time away from the charts, and then when it does reverse and we're ready to start moving again, I will obviously get everybody in line, and I will make sure that we're all ready to rock and roll when the market turns. So if anybody has any questions, please just let me know. This is where we're at with Bitcoin at the moment. It's all about a waiting game right now. We're going to sit tight. We're going to wait to see the signs of reversal, see where this bearish move slows down, see where we can pick it up again, and try and long the bottom. So we'll either be taking our longs from here if it reverses, which is looking unlikely, otherwise from the 28k region, and then obviously if it breaks below that, then Bitcoin is going to be in trouble and it will see 20k again. So that's all for me today. If you guys are enjoying these videos, please help me to share them out, like, comment, subscribe, the jig. Keep me posted. If you've got any questions, let me know. I'll be in the group all day. Cheers.